Hey everybody, it's Harrison. Welcome back into Maine Connects, your source for all things small business and real estate in Maine. I want to talk a little bit today about some headlines that have been going around as it relates to short-term rentals. Many people just refer to them as Airbnbs, but short-term rentals are a whole separate category of real estate where people are actually buying properties and offering them for rent either by the night, by a few days, by the week, vacation rental style. So there have been many reports flying around lately that there is a potential crash coming in the short-term rental market. And these industry tracking websites are looking at this metric called revpal, and that is revenue per available listing. And what that's measuring is what is the average rate on the listings that are available on the market. So similar to how we would measure the average rate of homes that are on the market, and similar to how you measure the average rate of hotel rooms that are available on the market, same metric with short-term rentals, looking at the average price of those properties that are available. So All the Rooms, which is a industry tracking website, they have all kinds of short-term rental data. They're reporting up to 50% declines in that revenue per available listing in some markets. 50% reductions in rates would be catastrophic to those property owners. And they're attributing these declines to things like there are too many short-term rentals available. Vacationers are potentially choosing against short-term rentals and looking for more like a hotel and resort experience. It could be a sign of overall potential travel reductions across the industry, and a lot of that is being attributed to the uncertainty of the economy ahead of us. So All the Rooms is feeling like we've got too many short-term rentals, vacationers want something different, or they're not willing to pay those prices. And maybe we're seeing fewer vacationers because they just aren't willing to spend the money not knowing what might be coming. This matters a lot in those markets because if those investors see those declines and decide to sell those properties, you could have a sudden and immediate change to the inventory of that market, which would have a dramatic effect on pricing. You could see home prices drop significantly if we all of a sudden got a lot of inventory coming on the market at one time. So the more houses that are available, the lower the prices are because buyers have more choices. So in the markets that are seeing those big declines, there's a lot of concern. On the other hand, AirDNA came out behind that report and said, we're not seeing declines like that. We're seeing declines of maybe up to 10% in those areas. And we think that's more related to vacationers being a little bit more price conscious, potentially waiting later to book in hopes they might catch like a really hot last minute deal, and maybe just some changes in the inventory that's available. Maybe there is some potentially less expensive Airbnbs or short-term rentals that have come on the market since we measured this last year. Because of course, this measure, just like anything else, is measuring back to last year. And last year might have been one of the best years in short-term rentals we've ever seen. So there is some conflicting information out there. But either way, if we do see declines in the short-term rental market for an extended period of time, it is likely that some investors will decide, this isn't for me anymore, this property doesn't work as a short-term rental, and maybe I'm going to sell it. What I can say is we're not seeing declines like this in Maine yet, at least not that I've seen. Our management company, Guardian Properties, is continuing to rent up the short-term rentals that we manage at rates that are at least consistent with last year, potentially in some cases higher. There is still a lot of demand for vacation rentals in Maine. So I'm not forecasting a short-term rental crash in Maine. I do think now is a good time to evaluate your short-term rentals if you are a short-term rental investor. Because what's important is to understand from this market can change. It can change quickly, it can change in dramatic ways, and oftentimes things you can't control. And what I've seen from talking to a lot of short-term rental investors is that they paid a higher price for this property than a primary home buyer would have. So a buyer looking to buy this to live in it. Those investors are paying a higher price because they're banking on getting those higher short-term rental rates. We've seen dramatic increases in short-term rental rates, long-term rental rates, all rental rates in Maine. And a lot of people have bought short-term rentals banking on that to continue. So as a short-term rental investor, the first question you need to ask yourself is, when I bought this property, what was I expecting the rates to be? If the rates decline, will I still be able to afford to keep this property? If the rates decline by 10% or 20% or 40% like these reports are showing, what does that mean to me? Because I've worked with many short-term rental investors, and I've always recommended that you have more than one option. Because if you're just stuck on being able to rent these short-term at those higher rates and something changes, what else can you do? Because ultimately your short-term rental rates are impacted by a lot of factors. The economy, how good do vacationers feel about the prospects of the economy going forward? And are they willing to pay what they usually do for a vacation? Competition. We continue to see more short-term rentals come on the market. People are buying single-family homes in Maine, on the coast, in some cases in neighborhoods in some of your major cities, and turning them into short-term rentals. So if more competition hits the market, will you be able to maintain your price? And also regulation. So an example is we saw Portland dramatically change the short-term rental rules. They capped how many there could be. They capped, whether or not you can live in it or not. You now have to live in it. Portland made a lot of changes to dramatically alter the short-term rental landscape, and that caused a lot of short-term rentals in Portland to come off the market. They either became primary homes, they ended up being sold, they got converted to long-term rentals or something else. Because in Portland, you have to hold a license to be able to run a short-term rental. But if you can't short-term rental anymore, there are other options. Can you look at an executive rental? And that could be somebody like an executive traveling to a new company, like an IDEX or an LL Bean, that needs somewhere to live for a short period of time. Could you do an executive rental? Could you do a long-term rental? Could you just put it on the rental market and have somebody live in it long-term? Could you do a furnished rental? And those are very popular with things like traveling nurses and also potentially professionals that are maybe traveling for more than just a week or two. Maybe they're coming for a couple of months. Maybe they're on a residency somewhere that need to be there for an extended period of time, but not forever. Furnished rentals are great. Medium-term rental, same idea. Not necessarily a full year rental, not a week-to-week rental, but something that's more like 3 months or 6 months and doesn't come furnished. Somebody that actually is just coming here for a little while, is going to bring all their stuff, bring their family, live in it, and then to have to leave again for the next assignment. Or ultimately, you could always sell the property. But you've got to look at, did you buy the property, and are you into the property in a position where you can sell that and get out of it? So with the short-term rental landscape constantly changing, when was the last time you checked in on your property? When was the last time you evaluated, does this property work if the market shifts? Does this property work if regulation comes in? Does this property work if I see more competition and my rates come down? It would be really good for those investors to actually spend a little bit of time looking at the properties that you own and figuring out what works, what can you withstand, how big a change before the property doesn't make sense for you anymore. Because ultimately, the more prepared you are for that change and the more you know the signs to look for, the less likely you're going to get a nasty surprise when you get into the summer, you can't get your rate, and all of a sudden the property doesn't cash flow. And now you're paying for it out of your own pocket because you can't get the rates you need to cover the cost. So, while I don't expect a short-term rental crash in this market, short-term rentals do change. They change daily. They change seasonally. It is very important for those of you that are investing in short-term rentals to at least spend a little bit of time to understand where your short-term rental is at currently, what level of change can it withstand, and what other options might work for you should the market change on you. If I can help in any way, feel free to reach out, send me a message, drop a comment, or you can find me at mainconnects.com. See you soon.